to the honeystocks.com analysis for the 22nd of March 2019. If this is your first time here, I like to throw out some market analysis, usually around once a month, as a kind of social media kind of promo. And this is no different. Many of you will follow me religiously. You already be part of my email list, follow me, various social medias, etc. But if this is your first time here, what I will be doing over the next 20 minutes or so is I will have around 20 charts, stocks that I feel like should be on your radar. If they are currently positions that you're currently in, it might give you another perspective on a technical level as to what I'm seeing in the markets. These are super popular, so I hope it just helps you in some way. But as always, before we really get into it, I just need you to quickly pause the video and give that a quick read. It's very, very important. It's the honeystocks.com disclaimer. You are in charge of your own money. These are just ideas and analysis. Obviously, do your own due diligence. So the markets are on Friday. I think it's fair to say have probably had most of you doing the Ronaldo. Maybe you're not quite sure what's happening from here on in. So if it's a case that you are struggling to understand technical analysis, or maybe you want to just pick up other perspectives, I think this is going to help you a lot. If you are somebody that's perhaps learning from losses, which is obviously the most horrific experience, maybe you feel like you're pushing a rock up a hill, maybe you are trying to learn how to trade via various free social media outlets, YouTube probably the biggest culprit of them all. You might be wondering who I am. Well, I'm Sam, and I run honeystocks.com, and certainly I have a lot of freedom with what I do. I'm currently working from Mexico at the moment, and like I said, I run honeystocks.com trading school, which is effectively a technical analysis. I have a very technical background, and that is the style with which I choose to trade the markets. Now, if you jump onto my website, I log every single trade idea that I post to my client community for absolute complete transparency. So please feel free to jump onto the website, go and check it all out and see exactly what it is that I do. Now, who is this for? Now, I do not I suppose, cater towards the whole get-rich-quick scheme. I don't particularly like the day trading game either. If your trading setup looks remotely like that, this is not going to be for you. I personally trade that way. All I need is my market analysis and my iPad, and I am good to go. That was me in Vienna late last year. And I do not subscribe to all the nonsense and all the get-rich-quick schemes that you will likely see plastered about social media. That is not me. So rather than me just rambling on, I think it's probably best that I just get started. You're probably getting bored already, but I think I'll just walk through the charts like I normally do. Like I said, I'll get through this in about 10-15 minutes. But if you are somebody that does struggle, maybe you just want to have another perspective, or maybe you just want to expand your knowledge a little bit. Maybe you could stick around for a couple of minutes at the end. I might be able to help you out in some way. So first up, we have Match.com. This is a stock that was doing really well last year. For me, it does start to kind of look interesting once it goes above $60. Now, the first thing I need to say is, and I will talk about the overall market and some charts in a few minutes, but the market at the moment is in a very sticky situation. How the market performs early next week will dictate whether or not any of these ideas are useful or are rendered useless. there is an expectation that you have an understanding of the market and how it works, and how to identify strength within the market and so forth. So please do, if you like the look of any of these charts and they make sense to you, please set price alerts, etc. But obviously, do your own due diligence if you are going to be jumping into any of these ideas. So Match.com, I think a breakout entry above $60. It's very, very close. It's something that is very interesting to me at the moment. The trade desk is another chart that I know that quite a lot of my client group have done incredibly well on recently. I think we have to be bullish above $200, but again, it will depend on what happens early next week as to whether or not we stay above the $200 round figure. So please do bear that in mind. If it's a trade that you're currently in, I think if it drops below 200, I think it might be a case of tightening up stop losses, protecting, maximizing profit, and then perhaps revisiting a later day. Squaring, I've talked about this one quite a lot recently. It's simply a case of just waiting for this $80 round number to clear. I think we've got to be bullish above the 73, 74 level, above the 200 SMA. So that's certainly what I'm looking at the moment when I'm assessing squaring. I think above $80 and it becomes super interesting. ZTS, it's on a really good, excellent uptrend at the moment. Again, I think it's a case of just waiting for this $100 round number to clear. Again, I think if you're in the trade at the moment and the market starts to decline, it might be a case of now kind of protecting profits. $100 does represent resistance for most stocks. So certainly I would be looking to bear that in mind. But for me, it does become interesting for a new entry above $100. IQ. Now, this is one that is talked about a lot, and I do get a lot of messages, emails, etc. about China and IQ in particular. I think given the returns that myself and my clients generated last year when China was on a rocket ship. Obviously, since then, there's been a heavy decline. We are now starting to resume a very good uptrend. But the concern that I perhaps have here for those of you that are perhaps in the position is a drop below the 200 SMA. That's always a key level for most stocks. So I would be looking to just kind of manage my trade a little bit more closely. Certainly above the 200 SMA, you've got to kind of be bullish. But below it, I think you've got to exercise a little bit of caution there. PayPal. Certainly, we've had a breakout above $100. Perhaps a few of you that follow my social medias will already understand that my clients got an alert for this. It started off incredibly well, jumped to 105. Obviously, Friday put a little bit of a spanner in the works. But I think if $100 holds, I think we've got to be bullish. But again, it's going to dictate, the market is going to dictate what happens next with PayPal. I'm not going to try and pronounce this one. Let's just call it a semiconductor stock. Again, it's been on an incredible move recently. It got a little bit overextended. Obviously, momentum was there. RSI quite high. We've had a bit of a drop, bit of a pullback. But I think if we get a move back above 130, then certainly that will represent an entry. But for those of you that obviously like to perhaps look at pullback entries, it's not always about breakouts. There's very clear strategies. There's very clear technical tools that you can use in order to pinpoint high probability pullback entries into the market. That might be something that we see with this stock because there are a couple of bearish signals with the technicals. So certainly I would be looking to just bear that in mind, I think. Okta, this is one that has been talked about a lot recently. Really good move. I think provided we stay above this 50 SMA, provided that keeps holding as support, I think we've kind of, got to be bullish on the stock. I talked a minute ago about, some of the technical tools that we can use to pinpoint pullback entries. That's one of them. Clear as you like. Obviously, then the bounce to the upside. 50 SMA holding support. So I think as long as the 50 SMA is rising, and hopefully price will rise with it, we should hopefully get back towards 87 and start moving back towards 100. But obviously we have to be mindful. Nvidia, again, I've had so many messages about this one. For me, it's not appealing at the moment. A lot of you will already know that I was bearish on Nvidia when we had this breakdown here. It was slow, it was fast and aggressive. A lot of you out there are still holding positions that you wish you had got rid of. I totally get it. I don't like to, I suppose, catch falling knives. I don't like to hold stocks. As soon as I suppose the chart doesn't, conform to my original thesis, I am not shy in just cutting the trade early and just saying, let's reallocate risk elsewhere. I think that's one of those with Nvidia. Certainly, it looks like the bottom might have been found, but again, I would be looking for this to perhaps move maybe above the $200 level. Might be a place to revisit Nvidia. Roku, again, lots of messages about this one. We had an analyst downgrade a couple of weeks ago. Obviously, the stock fell. We found support where you'd expect to find support. It started to move off nicely. Friday's obviously dropped the stock a little bit. Where it goes from here is anybody's guess. There is an unfavourable chart pattern, shall we say, that's potentially forming, but we also understand as well that we could have found the pullback entry there at $60. Bit of a gamble by going in there. For me, I think above $80 is where I would be looking to go. So for me, it's a case of standing aside. Most of you will already know that a few weeks ago I was, banging the drum that we were massively overextended. We were approaching resistance. It was absolutely valid to be blocking in profits up here. But certainly, if you're holding Roku at the moment, hopefully the bottom's found and we make a move to the upside, because quite honestly, I prefer taking buy positions in the market. I don't particularly want to go back to late last year where obviously shorting the market was the way forward. So I think with Roku, it's something to certainly bear in mind. So that's the first few charts that I want to discuss with you. I am going to talk about the overall market in a second, and then I have another, I think another 10 charts for you that I think will be super beneficial for you. But if you're probably watching this and you're thinking, what the hell is this? What's this Scottish guy talking about? So you might have gathered just from the charts, etc., that the approach I have is very, very logical. I don't like to take the short-term trading view, trading, within minutes and hours. I'm not one of these guys that likes to get in and out. My time horizon is more intermediate, so I'm really looking to hold stocks for weeks to months. If it's an incredibly good trend, I want to be in that as long as possible. I am not in the stock market for $2 moves. I'm not looking to take a stock from $20 to $21. I want to take it from $20 to $50. I want to take a stock from $100 to $180. I'm not in it for $2, $3, $4 moves. And I think when you understand that that's where the real money lies in the stock market, that's essentially what you're doing, rather than feeling like you're completely chained to a huge ball. There's a lot of freedom that accompanies a trading style where you essentially trade with the trend, and you obviously have swing trading elements within that as well. But I just want to clarify, I'm not in this for a couple of dollar moves. I'm in it for the big money. So if you're somebody that struggles with the short-term trading and you don't have any consistency, like I said, stick around for a couple of minutes at the end. I might be able to help you. And so first off, overall market. This is the S&P 500 SPY. Thursday, it looked like we were off and running. Obviously, Friday, cause for concern. With any failed breakouts, oftentimes we can get fast and aggressive moves in the opposite direction. It looks like we may have a failed breakout with SPY. Now, that's obviously not good news. We also have to consider the candlesticks that we have here. Again, it's not good news. So my message to my current clients are proceed, but proceed with absolute caution. It's going to be interesting to see what happens here. I don't consider this to be the same environment where we just had a resistance and we dropped back to a key support level and then it moved off again. This has the potential to be very, very different. Obviously, I'm incredibly flexible with my approach. If Monday arrives and the stock market rebounds, then absolutely happy days. Nobody will be more happy than I. But certainly when we look at technicals and we look at the technical analysis side of things, we have to go with what the charts are telling us. And at the moment with SPY, with Dow Jones, again, unfavourable candles, we may not have found support where we would want to find support. So the message of the day is certainly caution. It has to be a completely cautious approach. How you should choose to kind of manage your positions is obviously entirely up to you. All I can really do is really just what I see on a technical level. If you go back through my history, through my blogs, etc., I don't get it wrong very often. So certainly, I think it's something that we should certainly be mindful of. Triple Q, again, tech. The expectation and the hope is that this green arrow moves to that green arrow. Obviously, that would have a direct correlation with the individual components within the tech area rising as well. Obviously, Friday, not great, but it'll be interesting to see if this level holds in tech and then we get a bounce to the upside. Tech has certainly been an incredibly lucrative place to be over the last few months. I think everybody knows this. If you've not made any money from trading over the last few months, I would question your approach. So certainly just bear that in mind. That's the three of the charts that I just wanted to share with you. There are many, many, many more charts that give me an overall picture, but I think for the purposes of just this presentation, it just makes sense that I walk through a few of the key ones. Now, one thing that we do have to be mindful of is identifying strength within the market. Now, when one area declines, we should be mindful of where the money is moving to, because we know that the big money, the hedge funds, they all still have to meet their targets. The money managers still have to make money. So when the stock market declines, there are other areas of the market that do start to move. I mean, gold, palladium, jump to mind at the moment. But what was interesting for me on Friday, as someone who looks at the overall market and has an overall view, the 30,000 foot view, as I like to call it, I did notice that on Friday, utilities continued a move to the upside. So with utilities, it's obviously like the rest of the market, it's performed really well. We've had a breakout retest and now it's moving off again. So what we should really be looking to do with scenarios like that is really just look to that sector and maybe try to identify some of the strength within that sector to see where the money is perhaps being allocated. This might be a stock that is on your radar, it might not be, but American Waterworks Company, again, we broke out above $100. It's been moving reasonably nicely. It's not a massively fast mover or anything, but if there's those of you out there that are perhaps looking for some defensive stocks, this might be one to perhaps consider. RSI is a bit overextended. It might be a case of waiting for a defined pullback entry, but certainly, I think the chart really speaks for itself on the recent move here. So yeah, I think utilities might be somewhere to look if the stock market continues a decline. AMD, lots of messages about this. Quite a lot of my clients have made an incredible amount of money on this recently. And yeah, I think we've got to kind of be bullish above 25. Again, Thursday, it looked like we were off and running and we were going to start the next kind of move to the upside. Friday didn't play ball. So it's going to be interesting to see if $25 holds as support. Hopefully it does. I am certainly bullish above 25. I think if you decline below 25, I think it might be a case of booking profits and then just living to fight another day and perhaps try and pinpoint another entry into the market. But certainly that's what I'm seeing with AMD. PBR. Now, we got a breakout in PBR. I actually sent a chart out to my guys way back here, but we didn't get the breakout that was needed. We got a decline. Last week, the chart actually became active. So everything was looking great. Then we got some news, came out of Brazil, somebody got arrested, stock market in Brazil, Brazilian market just dived, and obviously PBR was a casualty of that. So for me, it's not looking terribly great now. It's just treated like a fake breakout, and it's got a bit of a decline here. So where it goes from here is anybody's guess. So if you are in PBR, maybe you're looking at PBR. I think you've got to wait again, a little bit of patience to see if you can get that break above there, or the super conservative amongst you might want to just kind of wait for $20.50 to clear and then look to take that entry. But PBR at the moment isn't massively appealing, so yeah, bit of a gamble in my view. Funko, again, another chart that I really like, but it's the overall market that's now no longer playing ball. It looks like we've, above $20, certainly bullish. I think if it drops below $20, I think you just forget it and you just move on to the next one. Well, Funko's a company, done very well on earnings, beat most metrics by all accounts. Wall Street done what Wall Street likes to do, gapped up, tanked the stock, discount on offer, moved to the upside. Now it's just kind of moving sideways, doing nothing. So I think it's just a case of just waiting to see what happens with Funko and just plotting your next move. Salesforce, again, I think above 166, I think we can be bullish on Salesforce. Any defined pullback is also a possibility here. I think the 50 SMA, now I'm not going to drag the chart back over the last 18 months, but the 50 SMA historically for Salesforce has acted as good support for an uptrend. So certainly I would bear that in mind if you're looking for a new entry into Salesforce, but others amongst you might just want to kind of wait for 166 to break. Hopefully we get this support level hold also. I think if you break below that, it's not massively great news, and it's definitely not good news if you break below the 50 SMA. Universal Display Corp. So certainly when we got the breakout above 130, it's obviously been off and running. I would really like to see this level at 150 hold as support. If 150 holds as support, I think it then starts to kind of make the move back to previous highs at 210. This is a stock that, in my opinion, was unfairly massacred by the stock market last year. We were way up at 210. I was actually looking to take an entry at 210. It's just a good thing that I understand technical analysis and I didn't take the entry at 210. But the market absolutely tanked the stock. We found the bottom around $80, it looks like, and now we're off again. So certainly with OLED, I think above 150, I think we can be bullish. Again, we may well get a decline, and we may come back and retest 130. So certainly I'd be watching OLED closely. It's something I like very much. Shopify, again, I get lots of messages and emails about this. It's obviously had an incredible move recently from 120 up to 210. Bit of a decline over the last few days. We've dropped below $200. I think if you get a decline on Monday, Tuesday, and that it really starts to tank, I think maximizing profits is not a bad thing, especially if we consider the $200 level has been a failed break above. So it's a case of maximizing profit and just revisiting it another day. But Shopify is one of those that, given the excellent trend, I can understand why I get so many messages and emails about it. But yeah, hopefully that kind of explains my, one size fits all for all the messages and emails, which clearly I just don't have the time anymore to kind of respond to. And we also have Tesla. Now, the chart for Tesla is horrific. It's up, it's down, there's no structure. I don't understand why it's a popular stock for some of you. Some of you are obviously in this and taking little $10 moves and all the rest of it. And as long as you're making money, I don't care how you make your money as long as you're making money. But certainly for those of you that are in there, I'd be watching this level closely around the 250 mark. Historically, it's acted as support. I think if you get a break below 250, though, I think you could be someone who wants to short Tesla. It's not a chart I particularly find appealing, but again, because I get so many messages about it, I feel like I should probably just give some sort of response to some of you who follow the stock and like to jump in for little 2% moves. So those are the charts I really wanted to talk with you about today. Like I said at the start, and like I said, halfway through the presentation, if you're somebody that is perhaps struggling for consistency, you're struggling with results, maybe you struggle with technical analysis, with how to put it all together and how the market interacts with all the technical tools, etc. I totally get it. I understand the path to success in the stock market is often a long road. It can sometimes be a lonely road. I totally understand it. But there is a way to get consistency, okay? Now, I think there's a few questions that a lot of you maybe need to ask yourself. And one of those is just, how much happier would your life be if you could just cut out all the noise and just make incredibly good decisions? Now, when I talk about noise, I'm talking about CNBC, I'm talking about Bloomberg, I'm talking about Kramer, I'm talking about StockTwits, I'm talking about Facebook, I'm talking about Twitter. If you could just filter out all the noise and just learn to be a completely independent thinker who understands absolutely everything, how much easier would trading be for you? Now, obviously, I can't answer that question for you, but I think when you understand that if you have an approach where you don't feel like you're at the total mercy of the stock market, I know that things improve. If you're able to build a trading plan and have a rule set for the rest of your life, it is an absolute game changer. Now, like I said, I publish every single trade idea that I post to my client group on my website, but that's not what I do. I'm not a signal service. I'm not, like I said at the start, I'm not a get-rich-quick scheme or anything like that. What I do is I put the stock market together for you so that you understand what's going on and you understand that simplicity is the key and not complexity. Some of you will be looking at these charts that I've been walking through today and it will make sense to you. I totally understand that. But the thing is that there's a little bit more to it than what I'm presenting to you. Um, and I also know that the average journey for any trader is to spend a couple of years. And like I said at the start, you're probably learning from losses. You're learning from YouTube. You're maybe trying to learn from my market analysis promos. Um, you're most definitely trying to read up and going through all the books that you can read, and you're going to spend hundreds of hours trying to put it all together. And because of the losses and because of the inconsistency, all that's going to end up happening is you're going to do that to the stock market and you're going to say goodbye and I cannot do this. When the reality is it doesn't have to be that way. Now, obviously at honeystocks.com, we believe in making a complete difference. I have guys in my community, my clients that make tens of thousands of dollars. One of my guys had a $100,000 day. Now, I'm not saying that to just say that that's achievable for everybody, because the reality is it isn't. You obviously need to have some capital behind you. You need to work your way, up the ladder, so to speak. So those sorts of results are not achievable overnight. And anybody that tells you that it is, then you need to run. And the reason why we make a difference at honeystocks.com is because we've just got an incredible group of clients who are now incredible traders in their own right, because they understand the way the market works and how to identify strength within the market. So the question you maybe need to ask yourself is, do you want to, keep doing it the old way, have the inconsistency, or do you want to have the structure, the rule set, the trading plan, and to learn a new way? If you do want to learn a new way, it's very, very simple. You can jump onto my website, honeystocks.com, just click apply, choose a time. Just tell me what you struggle with. We'll have a quick chat. It's that simple now. With the chat, I'm incredibly informal. I'm not going to try and push something down your throat or anything like that. What I like to do is to see what you struggle with. If I'm a good fit for you, if honeystocks.com is a good fit for you, then certainly, I'll make you an offer. But if you want to just have a chat on something that you're struggling with, I'm happy to have a conversation with you. Most of my inquiries come from the US and Canada. Now, because I'm in Mexico at the moment, I am actually on your time zone for the first time in a long time. So my calendar is now fully open for the next 3 or 4 days. So if you do want to have a chat with me, if you do struggle with something, honestly, don't be shy. Just jump onto my website, tell me what you struggle with, and I'll give you a call via Skype. It really is that simple. So yeah, just jump on, choose the time, and we'll go from there. It's not rocket science, guys. You've probably got from this presentation that I'm just incredibly chill, very relaxed, very informal. So if you do struggle, just jump onto the website, apply, tell me what you struggle with, we'll have a chat, job done. But as always, if this resonates with you in any way, please feel free to subscribe to me either on YouTube, subscribe to my email list, follow me on my various social medias, etc. But as always, from the absolute bottom of my heart, thank you very much for watching, and I hope to speak to you soon. Thanks.